In this video, I'll show you my 3 favorite stocks to buy in the market right now. These are businesses sitting at the center of one of the biggest technological shifts in decades, with the potential to compound shareholder value for years as artificial intelligence transforms industries around the world. By the end of this video, you'll understand why I believe these companies deserve serious attention from long-term investors, and why one of them could still be in the very early stages of an incredible growth story. Let's begin with my first pick, Nebius, ticker symbol NBIS. If you've been following the AI revolution, you've probably noticed that everyone talks about the companies building the software, the chatbots, and the applications, but far fewer people spend time talking about the businesses making all of that computing power possible. That is exactly where Nebius stands out. The AI race is not just about creating smarter models, it is about having enough computing infrastructure to train and run those models at massive scale. Every new AI breakthrough requires enormous amounts of graphics processing power, networking capacity, storage, and cloud infrastructure. Without that foundation, none of the exciting AI applications exist. Nebius is building exactly that foundation. Instead of competing in crowded software markets, the company is focused on providing AI-native cloud infrastructure designed specifically for developers and enterprises building advanced artificial intelligence applications. That gives Nebius exposure to one of the fastest-growing segments of the technology industry. What makes this story even more interesting is the speed at which the business has been expanding. The company's first quarter revenue reached approximately $399 million, representing an extraordinary 684% increase compared with the same period a year earlier. That kind of growth is extremely rare for a company operating at this scale, and it reflects the enormous demand for AI computing infrastructure across the market. But revenue growth alone is not the most impressive part of the story. Management is aggressively investing to build capacity before demand gets even larger. During the quarter, Nebius invested roughly $2.5 billion in capital expenditures, primarily purchasing GPUs and other critical hardware needed to expand its AI cloud platform. That is an enormous investment for a company of its size, showing management's confidence that demand for AI infrastructure will continue growing for many years. Some investors immediately hear numbers like that and become worried. They think massive spending automatically means excessive risk, but context matters. Nebius strengthened its balance sheet significantly by raising approximately $6.3 billion during the quarter, leaving the company with roughly $9.3 billion in cash. That gives management substantial financial flexibility to continue expanding without facing immediate liquidity concerns. This is important because AI infrastructure is becoming a scale business. The companies with the largest computing capacity can attract larger enterprise customers. Larger customers generate more revenue. More revenue funds additional expansion. That creates a powerful cycle where scale can reinforce competitive advantages over time. Another reason I like Nebius is that management appears focused on building long-term value rather than maximizing short-term profitability. Many investors obsess over quarterly earnings. I care much more about whether management is making intelligent investments that increase the company's future earning power. If AI adoption continues accelerating, today's investments could become tomorrow's highly productive assets. Think about how cloud computing evolved over the past 15 years. The companies that invested aggressively before demand exploded were eventually rewarded because they already had the infrastructure customers needed. Nebius appears to be following a similar strategy in AI cloud computing. Of course, this is not a risk-free investment. The company operates in an industry where technology evolves quickly. Competition remains intense. Capital spending requirements are enormous. Execution has to remain excellent, but those risks also help explain why opportunities can exist. Markets rarely offer exceptional long-term returns without meaningful uncertainty. I also like the fact that Nebius is benefiting from multiple growth drivers at the same time. Artificial intelligence adoption continues expanding across healthcare, financial services, manufacturing, scientific research, autonomous systems, software development, media creation. Every one of these industries requires computing resources. Every new enterprise AI deployment increases demand for infrastructure somewhere in the value chain. Nebius does not need to predict which AI application becomes the biggest winner. It simply benefits as more organizations require AI computing capacity. That is a business model I find very attractive. Another point investors sometimes overlook is how sticky infrastructure businesses can become. Once customers build their workflows around a particular cloud environment, switching providers becomes expensive and time-consuming. That creates customer retention opportunities and recurring revenue potential. Those characteristics often lead to stronger long-term economics than many investors initially expect. When I evaluate growth companies, I always ask one important question. Is this business solving a temporary problem or a permanent one? In Nebius' case, I believe the need for AI computing infrastructure is likely to become even more important over the next decade. Artificial intelligence models continue growing larger, inference workloads continue expanding, enterprise adoption remains in its early stages, governments and corporations continue investing billions into AI capabilities. All of those trends point toward increasing demand for computing infrastructure rather than decreasing demand. That gives Nebius a long runway for potential expansion. I also appreciate that management appears willing to invest ahead of demand rather than waiting until competitors have already captured market share. That approach can temporarily pressure financial results, but it can also create stronger competitive positioning later. Successful investing often requires distinguishing between expenses that simply disappear and investments that create future earning power. Building AI infrastructure belongs in the second category if management executes effectively. One additional reason I remain optimistic is that investor interest in AI infrastructure extends well beyond a single year. Industry spending continues to rise as major technology companies invest heavily in expanding data center capacity and artificial intelligence capabilities, creating long-term demand for companies supporting that ecosystem. When I look across the market today, I see many companies benefiting indirectly from AI. Nebius is different. Its business exists because AI exists. That creates very direct exposure to one of the most important technological trends of this decade. Would I expect volatility? Absolutely. Growth stocks often experience significant price swings. Short-term sentiment can change rapidly. But if the business continues executing successfully and demand continues expanding, those temporary fluctuations may matter far less over the long run than many investors think today. That is why Nebius earns the first spot on my list of favorite stocks to buy in the market right now. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. My second favorite stock to buy in the market right now is Micron Technology, ticker symbol MU. If Nebius represents the infrastructure powering artificial intelligence from the cloud, then Micron represents one of the most essential components inside every AI system. Artificial intelligence cannot function without memory. As AI models become larger and more sophisticated, they need dramatically more memory to process enormous amounts of data quickly and efficiently. That is exactly where Micron has positioned itself. The company is one of the world's leading producers of DEERAM and NAND memory, two technologies that are becoming increasingly important as AI workloads continue expanding. This is not simply another semiconductor company. Memory is one of the biggest bottlenecks in AI performance. Without enough high-speed memory, even the most advanced processors cannot operate at their full potential. Every new generation of AI servers requires significantly more memory than previous generations. That trend creates a powerful long-term demand driver for Micron. One of the biggest reasons I like the company is that artificial intelligence has fundamentally changed the outlook for the memory industry. For years, memory was viewed as a highly cyclical business. Prices would surge, then production would increase, supply would eventually exceed demand, prices would fall, profits would shrink, the cycle would repeat. Artificial intelligence is changing that equation. Demand today is not being driven only by smartphones or personal computers. It is increasingly being driven by AI data centers that require enormous quantities of high-performance memory. Those systems use significantly more memory than traditional computing platforms. That means every new AI server shipped into the market represents a much larger revenue opportunity. Micron has been executing exceptionally well in this environment. The company has continued benefiting from robust demand for its high-bandwidth memory products, commonly known as HBM. These advanced memory solutions are specifically designed for artificial intelligence workloads where speed and efficiency are absolutely critical. As AI adoption accelerates across industries, demand for HBM continues to grow rapidly. One of the most encouraging developments is that management has indicated much of its HBM production capacity has already been committed well into the future. That tells me customers are planning years ahead rather than making short-term purchases. It also provides better visibility into future revenue growth. Another reason I like Micron is its disciplined approach to capital allocation. Rather than flooding the market with excess supply, management has shown a willingness to balance production with long-term demand. That is important because healthier supply discipline can support stronger pricing over time. For investors, that potentially means more consistent profitability. Financial performance has also reflected these favorable industry trends. Revenue has been growing significantly as AI demand continues driving higher sales of premium memory products. Profitability has improved alongside those higher revenues, demonstrating that Micron is not simply selling more products, it is selling products with stronger economics. Margins matter because they ultimately determine how much cash a business can generate for shareholders. Higher margin products typically create greater flexibility for future investments, research, and shareholder returns. Another characteristic I appreciate about Micron is its continuous innovation. Memory technology is not something companies can simply develop once and ignore. Every generation requires higher performance, lower power consumption, and greater reliability. Micron has consistently invested in research and development to remain competitive in this rapidly evolving market. That commitment helps strengthen its competitive position over the long term. I also think many investors underestimate how broad AI demand could become. Today, much of the attention is focused on training large language models. Tomorrow, artificial intelligence could become embedded in nearly every enterprise application: healthcare, manufacturing, financial services, scientific research, autonomous vehicles, industrial automation, consumer electronics. Every one of those markets requires increasingly sophisticated memory solutions. That significantly expands Micron's long-term addressable market. Another reason I remain optimistic is the company's improving financial outlook. Strong AI demand has continued supporting higher revenue expectations and improving earnings potential, while industry analysts have become increasingly optimistic about the company's long-term growth trajectory. The broader investment community has also become more confident that AI-driven demand for advanced memory will remain strong over the coming years. What I particularly like is that Micron benefits regardless of which artificial intelligence software company eventually dominates. Whether enterprises choose one AI model or another, they still need advanced memory inside the servers powering those systems. That creates a business model built around enabling the entire ecosystem instead of depending on one specific application. Investors should also remember that memory content per server continues increasing. Every new generation of AI hardware typically requires even more advanced memory than the generation before it. That creates an attractive compounding effect. As AI deployments expand and hardware becomes more capable, memory demand has the potential to grow even faster. Of course, no investment is completely risk-free. The semiconductor industry remains competitive. Global economic slowdowns can temporarily affect demand. Pricing can still fluctuate from year to year. Those realities have not disappeared. However, I believe artificial intelligence has created a structural demand shift that is much stronger than previous technology cycles. Instead of relying primarily on consumer electronics upgrades, Micron now benefits from massive enterprise investments in AI infrastructure. That is a fundamentally different growth engine. When I look at the next decade, I believe memory will become even more valuable rather than less valuable. Artificial intelligence models are becoming larger. Inference workloads continue expanding. Edge AI devices are becoming more powerful. Data centers continue scaling. Every one of those trends points toward higher long-term memory demand. For investors willing to look beyond short-term market volatility, Micron appears well-positioned to benefit from one of the most important technological transformations in history. That is why it earns the second spot on my list of favorite stocks to buy in the market right now. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. My third and final favorite stock to buy in the market right now is Taiwan Semiconductor Manufacturing, ticker symbol TSM. If the first company provides AI infrastructure and the second provides the memory powering AI systems, this final company sits at the very heart of the entire semiconductor industry. Virtually every major technological breakthrough eventually depends on advanced semiconductor manufacturing. Designing a powerful chip is one thing. Actually producing that chip at scale with industry-leading yields, reliability, and performance is something entirely different. That is where Taiwan Semiconductor Manufacturing has built one of the strongest competitive advantages in the global economy. The company is the world's leading contract semiconductor manufacturer, producing some of the most advanced chips available anywhere. Its manufacturing expertise has taken decades to develop. That kind of experience cannot simply be replicated overnight. Building leading-edge fabrication facilities requires enormous amounts of capital, highly specialized engineering talent, and years of process optimization. Those barriers to entry create an incredibly powerful moat. As artificial intelligence continues expanding, demand for advanced semiconductor manufacturing continues growing alongside it. Every AI accelerator, every advanced processor, and every next-generation computing platform requires cutting-edge manufacturing technology. That places Taiwan semiconductor manufacturing at the center of one of the largest investment cycles the technology industry has ever experienced. One of the biggest reasons I like the company is its ability to consistently execute. Technology companies can promise exciting products. Manufacturing companies have to deliver them. Taiwan semiconductor manufacturing has repeatedly demonstrated its ability to manufacture increasingly advanced chips while maintaining exceptional production quality and strong customer relationships. That reliability has become one of its greatest competitive strengths. Customers building mission-critical products cannot afford manufacturing delays or inconsistent quality. They need a partner capable of delivering at enormous scale. That is exactly what Taiwan semiconductor manufacturing has built over many years. Financial performance continues reflecting this leadership position. The company has reported impressive revenue growth as demand for advanced AI chips continues accelerating. Its profitability remains among the strongest in the semiconductor manufacturing industry because advanced manufacturing commands premium pricing and because its operational efficiency remains exceptionally high. Even more impressive is the company's ability to generate substantial free cash flow while continuing to invest aggressively in future manufacturing capacity. That balance is extremely difficult to achieve. Many companies can grow quickly, others can generate strong cash flow. Very few consistently accomplish both. Taiwan semiconductor manufacturing has demonstrated that it can. Management also continues investing heavily in future fabrication facilities. Those investments may appear expensive today, but they are designed to support customer demand years into the future. Artificial intelligence is not a one-year trend. It represents a long-term transformation in computing. Building manufacturing capacity ahead of demand positions the company to benefit as AI adoption continues expanding globally. I also like the geographic diversification strategy the company has been pursuing. Expanding manufacturing capabilities across multiple regions helps strengthen supply chain resilience while supporting customers that increasingly value manufacturing flexibility. That strategy could become even more important over the coming decade. Another factor supporting my long-term optimism is the incredible complexity involved in advanced semiconductor manufacturing. Each new process generation requires billions of transistors working together with astonishing precision. The engineering challenges become more difficult every year. Companies capable of consistently solving those challenges earn an enormous competitive advantage. That advantage is exactly what Taiwan semiconductor manufacturing has built. When I evaluate long-term investments, I always ask whether a company becomes more valuable as technology advances. In this case, the answer appears to be yes. As processors become more sophisticated, manufacturing becomes more difficult. As manufacturing becomes more difficult, expertise becomes even more valuable. That creates a reinforcing cycle where technological leadership strengthens competitive positioning. I also appreciate the company's disciplined capital allocation. Management understands that maintaining manufacturing leadership requires continuous investment. Instead of maximizing short-term earnings at the expense of future competitiveness, the company continues investing in research, equipment, and advanced production technologies. That long-term mindset has helped establish its leadership position. Looking ahead, artificial intelligence is expected to remain one of the largest drivers of semiconductor demand. Data centers continue expanding. Enterprise AI adoption continues growing. Consumer devices are becoming increasingly intelligent. Industrial automation is accelerating. Robotics continues advancing. Every one of these trends requires increasingly advanced chips. And every advanced chip requires world-class manufacturing. That creates an attractive long-term growth runway. Of course, investors should recognize the risks. The semiconductor industry remains highly capital-intensive. Global economic conditions can influence customer spending. Geopolitical uncertainty can create market volatility. Those are real considerations. However, I believe the company's technological leadership, manufacturing expertise, financial strength, and critical role within the semiconductor ecosystem position it exceptionally well for long-term success. When I look across today's market, I see countless businesses attempting to benefit from artificial intelligence. Very few occupy positions that are as fundamental to the entire ecosystem as Taiwan semiconductor manufacturing. That is why it earns the third and final spot on my list. Taken together, these three businesses give investors exposure to three different layers of the AI revolution. Nebius provides the computing infrastructure. Micron Technology supplies the advanced memory enabling AI performance. Taiwan semiconductor manufacturing builds the advanced chips that make modern artificial intelligence possible. Each company benefits from different growth drivers. Each occupies a critical position within the broader AI ecosystem, and each has the potential to benefit as artificial intelligence continues reshaping the global economy over the next decade. That combination is exactly what I look for when building a long-term investment portfolio. I am not trying to predict what the stock market will do next week. I am looking for businesses that could become substantially more valuable over the next 5 to 10 years because they operate in industries with durable structural growth. These three companies check many of those boxes. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I would love to hear from you. Which of these three businesses do you believe has the strongest long-term competitive advantage? Nebius, Micron Technology, or Taiwan Semiconductor Manufacturing? And which one would you be most comfortable holding for the next 10 years? Let me know your thoughts in the comments because I read as many of them as I can. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.